Alright, I want to keep this video short, sweet, simple, and to the point. AMC and GameStop are selling off, and people are not liking the way the charts look. I see it on Twitter, I see it in Discord, and I have people messaging me one-on-one trying to figure out if they should hold on to their AMC. I did a little bit of digging. It didn't take an insane amount of time. However, I'm going to explain to you why I think AMC and GameStop are nearing a relative low and have a very, very likely potential upside in the next couple of weeks. So without further ado, please hit the like button. It's free. It helps me out. Also, it pushes this video out to more apes like you guys. Hit the subscribe button. Get us to 14,000 subscribers. Let's get into the video. Okay, so just to get this out of the way, even AI ETFs are purchasing AMC and GameStop. AIEQ, AI-powered ETF top 100 holdings heat map. We have a huge one as GameStop, another decently sized position in AMC. Now let's get into the juicy stuff. US action on short sellers likely in the next few months, according to the DOJ. As he states, in quotes, you'll see some more activity from us involving short sellers sometime in the next few months. Now, the recent rout in shares of US regional banks brought fresh scrutiny by criminal prosecutors and regulators of short sellers who had previously come under review in the wake of the meme stock craze of 2021. In other words, the DOJ is now looking into the crime that's happening with short sellers, not because of what happened in 2021, but what's happening to the bank stocks. In other words, they didn't really care, but now it's to the point where it's happening with the bank stocks, and now we should look into it because it's not only affecting retail. So yeah, they are scum, but as long as the DOJ is going to look into short sellers, this can't be sort of a negative catalyst. If anything, it's neutral. If anything, it's bullish, okay? Now, you may have noticed that the short interest has dropped from 25% to 20% over on Ortex, which we're going to get into that in 1 second. Utilization still maxed out. Cost to borrow sitting around 60%. As for APE, 5% short interest, cost to borrow not being reported. Okay, so the cost to borrow drop in AMC. I'd like to point you over to this Reddit post that says, alright, there have been a number of people on Twitter and AMC stocks screaming crime at the drop of short interest while the price has gone down. Now, yes, it's basically crime, but in not the way you think, right? It didn't just happen overnight. In this case, this Reddit DD says, okay, we check FINRA and we check the time for the short interest drop, and we also correlate it over their price action. We can see on 4-28, the short interest was 134 million shares, and on 5-15, the short interest was 105 million shares, a 29 million drop. The problem exists that NYSE and several other reporting agencies have only just updated short interest to reflect FINRA data. This makes it appear like the short interest dropped from 25.05% to 20.89% in a single day, which it didn't. It happened over time, between 4/28 to 5/15 to be exact. Now, from 4/28 to 5/15, we see a 16% rise in the price of AMC. And from 5/18 to 5/15, we see a 16% decrease in price of AMC. He goes, ignore the volume and data. TradingView does a shit job, and the volume data is often underreported. One thing to note is that these are all Fridays, which means the options expiry. As such, if I have to give a theory, it would be somebody that is using options to do arbitrage, reset short positions, and fails to delivers, which we talked about before on this channel. That's clearly what's happening. Given the almost equal rise from 4/28 to 5/15, 16% increase, and the almost exact decrease from 5/8 to 5/15, 16% decrease, this seems to be the case. As such, I expect the next reporting period we will see the short interest return to its upward bounds. More to the point, as we draw closer to the settlement date, it is my theory that the hedgies learned from past mistakes. We saw in March and April the large cup and handle patterns where AMC dropped and APE rose very quickly. This appeared to be due to news regarding the case/settlement. Now, rather than doing large swings that are noticeable, they are boiling the frog some apes don't notice. Unfortunately, we are limited to the data we get, as well as that data is inaccurate. Okay, so the short interest drop happened over a period of time, and you saw it scale up in price action, dump in price action, and chances are that that short interest is going to recoup itself back up at 25%, and now they're doing it over a period of time. They're getting a little bit smarter with the options chain. Now, this is one reason as to why we may be nearing a low. And the reason for that is because as soon as the short interest is updated and is adjusted, what's going to happen here is that short interests are going to short more, is going to rise, which you're going to see today and in yesterday's video. Shorts are doubling down on AMC. But now I want to shift over to what we just talked about in the Reddit post, options chain. Okay, so we've talked about day in and day out GameStop options chain looking extremely bullish, and we have touched on the charts for AMC and GameStop, which we're going to touch on in 1 minute. But another thing to note, AMC's options chain is not the most bullish. The only ones that recently shifted are the expiration for June 2nd and June 9th. So if you go over and you take a look at the charts, GameStop is currently trading at $22.95, down 1.38% on the day, and we have had 2 cycles that could potentially play out on GameStop to a T, and now we're in this period where everyone is questioning what's happening with the cycle because we are descending now, right? GameStop is down, AMC is down, and it's very simple. We have 2 paths we could take. Cycle 1 down here is a gradual uptrend, and GameStop still peaks just around Wednesday, June 21st. Okay, that would be just another cycle playing out. However, GameStop would still scale even higher. As for the other cycle, we would see a major rip either tomorrow or Monday next week, coming up, retesting the relative highs right around 27.50, scaling back down to 23.50, and then ripping even higher. We have 2 projections, okay? One is what happened back in January, and one is the cycles that we have been playing out. Notice where the options expiration is for AMC. Okay, so the expiration week June 2nd and the expiration week June 9th, I have a yellow box for those expiration weeks. If you were smart, if anybody was smart, you would play the first cycle, right? GameStop, you would make your money on your calls before Theta eats them and shits the bed. Not only that, the same thing between this time period, GameStop earnings, okay? Another thing to slap as to why you wouldn't play options further out. But really, I want to correlate this over to AMC. AMC is currently trading at $4.65, down 4.5% on the day. We had a major jump in the price. What you can see is we had this red cycle tracking to where it would have a relative peak mid-June, and I still think we are on track for that. We have quad witching day, June 16th for the options expiration, and of course we have the yellow box, the expiration June 2nd and the expiration June 9th, just to show you where it's more likely for AMC to have a relative peak and why we may be at a low. Now, if I take both of the cycles that we have tracked that have played out to a T with where AMC is going to peak, this is what to note, right? We're going to have this peak sometime mid-June, okay? Anything that happens now, whether this cycle is on or off, but again, right now, if you take a look at the red cycle we have drawn out, we're nearing a bottom. Okay, right now to next week, we're nearing a bottom, and then after that, we should be scaling even higher, leading into that June 9th expiration. So just keep that in mind. Also, we may have a sympathy pop in here for GameStop, and a lot of times, to spook people out of their positions, and it's working, you may see some sort of scale up like we've seen and a flash crash down before a major rip. Just like that GameStop meme you see all the time, we are here, or the Volkswagen squeeze, or whatever it is, okay? So there's a couple things to note here. AMC, chances are we're at a low, and we might sit down here for a week. I don't think that we're going lower than $4.25 at most, right? At most, I think that's the lowest we're going to drop to before essentially scaling back up to the upside. And this is just my opinion on that. And I still have more opinion as to why I think that. And the reason is implied volatility. Okay, implied volatility really sometimes actually most of the time, times the chart pretty well with what people are playing, okay? And what you can see now is the implied volatility is below the historical level to where it gets high, okay? So the IV is very, very low for AMC. My head is probably blocking it on this chart, but it is below this red line currently, and it is starting to scale up. As well as GameStop's, it is just touching this red line. My head is probably blocking it as well. It is just touching this red line, starting to scale up. GameStop is probably getting a little bit of a cool off on the chart. More people are betting calls, and essentially it's still looking good. I'm in no way, shape, or form panicking at all. As for the S&P 500, we're trading at 413.59, up 0.5% on the day, and I had, just for fun, drawn the box, the expiration June 2nd and the expiration June 9th, since options are a big thing in this video. And it looks like that is where SPY is going to have a move. It's been trading in this parallel channel, and when it comes to that date, it looks like it's going to have a move one way or the other, which the SPY always brings, especially small mid-cap stocks with it as to how it trades, right? It's going to affect the entire market. It's going to affect short seller positions, potentially sending out margin calls, depending on which way it goes, so on and so forth. So just keep that in the back of your head. Also, speaking of the S&P 500, I dropped a video yesterday of the US debt ceiling, JP Morgan's 3 secrets to hedge in case the US does default for the first time. So if you guys do want to save yourself, make sure to go watch that video. Keep in mind, I still hold my AMC calls, my GameStop calls, my AMC shares, my GameStop shares, and I am not worried a single bit. This is a quick update on the numbers, on the charts, so on and so forth. If you guys want up to 20 free stocks, make sure to use my link. Download Moomoo. The link is right under the video. I'll leave it in the top of comments as well. Once you download Moomoo, open an account and make a deposit, you're getting up to 20 free stocks for doing absolutely nothing. Also, if you open up an account using my link and make a deposit and you're from Australia, you're getting a guaranteed 10 free AMC stocks plus another 10 on top of that. So make sure to go do that. You also get free level 2 order book data, access to trading options, going long, going short, and more. Speaking of a ton of benefits, if you guys want to know my trades as soon as I take them, join the Discord. The link is under the video. I am in there on the daily. We have about 500 people in there who talk stocks all day long as well. We post losses, post gains, and sometimes take DGen bets, and we also have options trading alerts in there. Overall, guys, this is what I got for you for today's video. Hopefully you enjoyed watching. I love you all. Lottery Stocks out.